whole idea of this crypto cycle is do not pick it up. You can basically capture most of the returns just by being in Bitcoin, ETH, Solana. And if you need to feed your inner degen, 80% in stuff like that and 20% or 10% in the stuff you want to punt. So you can feed your inner degen, but you don't screw up the whole trade. Again, don't this up. It's the key mantra for this market. Don't overtrade, don't use leverage, don't FOMO, following your friends, looking at a trade you missed out. Just stick with the program, hold your trade, add on sell-offs, anything over 20%, add into it, and just calmly let it play out. Don't overtrade, don't try and pick tops, buy in, buy out, you'll miss it. I've seen everybody do it, I've done it myself. Just stick with the program, keep your cool head, hold it, store it on your ledger, don't let your exchange blow up and take it away from you. Don't do bloody DeFi farming, because something else can take your coins away. Your job is to not part with your coins until 2025, particularly towards the end of 2025. That's your one job.
Welcome back to Money 101. Exploring Raoul Pal's insights on the current crypto cycle, he advocates a balanced approach, emphasizing Bitcoin and Ethereum with a smaller allocation to promising altcoins. This strategy aims to optimize returns while managing risks. Bitcoin, recognized as digital gold, offers a secure store of value with a limited supply. Ethereum, evolving with upgrades like Ethereum 2.0, stands out as a crucial long-term investment. Both Bitcoin and Ethereum showcase resilience and growth, underscoring their significance in a crypto portfolio. For speculative investments, Raoul recommends diversifying into emerging cryptocurrencies for potential higher returns, albeit with increased risk. Subscribe and like to stay connected with our community.
3-4 months ago, as we said, we think Q4 is going to be something that is bananas. As the spigots to liquidity start to open, it should cause a kind of dramatic increase in prices. Part of that is the seasonality of the S&P 500. Here it is. It's been a beautiful chart, and off we go to the races. We should finish the year strong. I think we finished the NASDAQ, S&P all-time highs. So, nice finish to the year. Same with the NASDAQ. 93% correlation with seasonality. Off we go to the races. Nothing unusual. You'll have a correction or two en route, and you'll have some big spurts into the end. Everyone's going to be benchmark chasing at the end of the year. Let them do it. Just hold it. But what gets interesting is next year, the seasonality remains bananas. Presidential election years are very positive. The stimulus, and that stimulus helps buy votes. Buying votes allows the stock market to go up as well. They want that to happen. And this is the seasonality going back to 1964. Bitcoin seasonality is the same. Presidential election years, up only. The reason you've got the sell-off here in March is because this data has 2020 on. If you took 2020 out, straight up only. But there's only 2 cycles, so here's 3 cycles, but it's up only. It's the banana zone. It's when you make a shit ton of money by just sticking with the program. And hopefully I've laid out what the program is. How not to get caught by the next shiny thing. Betting on oil going up or something. Yes, there's trades to be done. Do those trades, but don't screw up the big position, the secular trend, with the liquidity trend, the everything code, the supermassive black hole that is crypto. Please don't screw those things up. Amazon and Coinbase have been great. The Amazon bust when it fell 97% coming out of the .com crash. Coinbase has been following that beautifully, as has ARK and a whole bunch of other things. And Coinbase is starting to wildly outperform, and it should continue to do so. Coinbase, I think, is one of the single most superior equity bets in the world because of what we know from the everything code, where crypto should be going over the next 24 months. Coinbase is going to be a massive beneficiary. So I think it's a great opportunity. This stuff works. It certainly worked this year, and I still think it continues to play out into the coming years. It won't be perfect. There'll be times when you're questioning me. There'll be times when I'm questioning myself. And maybe it's right to do so. Things can change, but I'm assuming they don't a lot. And using this exact framework from last year, we nailed in Global Macro Investor and for Real Vision Pro Macro 660% in Solana, 96% in ETH, 72% in the exponential age basket, 60% is semis, NASDAQ 47%. And you see the cyclical stuff, that lag behind because it lives in present day ISM. They'll all be positive next year, but again, some horses are faster than others. We talked a lot about the banana zone back in October last year when things were correcting. We said, look, October, always the end of a bear phase. Generally things get bullish, chase into year end. NASDAQ exploded higher through that, and I think it ends the year at all-time highs. As you know, we got forecasts out to 17,500 or so for Q2 next year from the Everything Code and from liquidity cycles. Feels about right to me. Let's see how that goes. Semis, same, beautiful breakout. Banana zone, we're in the middle of the banana zone, keeps going. Apple, banana zone, middle of the banana zone, keeps going. Tesla. This is the one chart that I think is the big trade. Of all the equity charts, Tesla and Coinbase are the two that I think encapsulate everything. Coinbase encapsulates the whole crypto theme, and Tesla is AI, EV, robotics, network effects, probably AR, and a whole bunch of things within this. And this chart's this step up, consolidate, step up, consolidate. The next step up, if it breaks the uptrend, that is a massive inverse head and shoulders, and the whole thing should explode higher. I think this thing can 5x from here, maybe even more. And that, for a company of this size, is extraordinary. And that's really what I think is coming. So Tesla lives in two worlds. It lives in the world of the Russell 2000, cyclical car company. Sales are sluggish, inventories are stacking up, prices are being cut. But it also lives in tech land, where AI is growing exponentially, robotics, EV, all of the themes of the exponential age. So right now they're fighting each other, which has kept Tesla down. I mean, yes, it's outperformed. I mean, it's done very well. I mean, it's up 200% this year or whatever. But the real move comes next year when the business cycle turns higher, car sales go up, inventories fall, and the exponential age really kicks in. Then Tesla's kind of unbeatable as a stock that represents all of it. So I really have my eye on Tesla. ARK is the forward-looking part of growth. It, like Coinbase, has been bottoming for a while. It should do very well over the next few years. So I'm very bullish on ARK and many of the companies that Kathy owns. I think their bet is the right bet. Yes, it took a beating, but that's all of growth tech did. And yes, it will recover. And so this theme will remain strong in the years going ahead. It had its kind of terrible moment, and I think going forwards, it's a great place to find returns.
Appreciate your viewership. Kindly consider giving us a thumbs up, subscribing, and sharing this content with your fellow crypto enthusiasts. Keep an eye out for additional insights and analyses.